Okay, guys, good evening. I think we can start now. So, yeah, I am Mariam Ali here. I'm from Sateha College. Okay. Yeah, so today I will be doing the first chapter in accounting. Okay, so before I do accounting, I just wanted to give you all an introduction of accounting. Okay. So what is accounting? Okay, so what are y'all going to study? So here, most of y'all, maybe some of y'all here, y'all are confused. Is y'all are confused what to select. Okay, are y'all going to do commerce stream, or maybe do you want to change your stream? Some of y'all might here thinking that okay, I didn't do O-level commerce, so that means I am going to find it difficult for me to do in A levels. Okay, so this is what the mindset the students have. Okay, because I was the same thing. I didn't do O-level commerce, guys. So don't think even if you didn't do O-level commerce, that means it's going to be difficult for you for your A levels. That's not the thing. Okay, O-level and A-level are two different things. Okay, so in O-level, guys, you might have not done commerce or whatever. Maybe you might have got very low results. Okay, that's not the problem. Why? Because guys, in A-levels, everyone are going to be the same. Because everyone will start in the same base. Every teacher will be teaching you from the basics. So if you all are scared thinking that I didn't do O-level commerce, I'm telling y'all don't have to worry, because I was the same thing. Okay, I didn't do O-level commerce. I was also scared. Okay, my friends might know better than me because they did O-level commerce. But guys, when you go to A-level, in A-levels, guys, they will start from the basic. Even maybe in O-levels, you did commerce and you got W, or maybe you got S. Okay, still you don't have to worry, because in A-levels, we are going to start from the basic. Okay, so that means, guys, all you have to do is you have to think this is just a new chapter, a new beginning in your life. Maybe O-levels, you were not studying, you were too playful. Okay, so you are given with a new opportunity. You are given with a new opportunity so that you can change your future. Okay, so don't just think that O levels, I got very low results, I'm so demotivated. In A levels, I'm just here to take 3 S passes. Okay, so guys, if you're a student like that, there's no use of studying A levels. I will just recommend you all to stay at home. If you are starting with the aim of just getting 3C or 3S passes, that's not the case. Everyone, guys, everyone here are equal. Maybe there are people here who got 9As, and there are people who got maybe 3As, 2As, no A's at all. But all of you all are going to be same from now. Why? Because we are starting from the beginning. This is a new chapter in your life. Understood? So don't put negative thoughts in your head. Start positively. Okay, so guys, because I'm telling y'all, you don't need to know any knowledge about commerce or anything to start A levels commerce, because guys, everyone are going to be the same. So yeah, so don't get scared thinking that your O level results are low, or maybe I didn't do commerce in your O levels. That's not the case. You will understand what I'm telling when I start explaining, because I will be starting from the basic. Okay, I will be starting from the basic. So here, each one of you all have to have a goal. What is your goal? No matter what, I will complete what I started, and I should get PS. Maybe you have an idea, okay, I'm not going to go to university. I don't care, guys. You started something, so that means you have to give your best. You have started something. You have to give your best. Okay, so that means you have started doing A levels, and what is the best you can give? Getting 3S. Guys, in life, if you have to start something, make sure you finish it. You finish it by giving your best. If not, don't start it. Don't start it, because no use spending so much time, spending so much money. You are going to waste all of it if you're not going to give your best. Because guys, your A-level investment will be like 3 to 4 or maybe 3 to 5 lakhs. Okay, not only that, more than that, the most important thing is you're going to spend 2.5 or 2 years of your life. Okay, so if you're not planning to get the maximum out of it, please don't start. So I hope here no one have taken the decision not to start. I hope everyone here has taken the decision to start it and give your best by taking 3 years. Okay, so that should be the first thing. And the second thing I have to tell you all is, in order to take not only accounting, guys, any subject in A level, if you want to take 3 years, you have to fill your cup. Okay, now you're wondering what I'm telling. I'm telling guys, you all have to fill your cup. If you fill your cup, you can get A in accounting or anything. Okay, since I'm teaching accounting, I'll say accounting. Okay, so what does fill your cup means? Okay, so this I just made it by myself. I just made it so that I can explain you all what are the 3 most important things you all have to focus. Cup. You should make sure you're filling your cup so that you can get A's in A levels. It's not, you can't focus only in one subject. That's not going to work. You should make sure the 3 subjects you're taking, you're going to balance all 3 subjects which you're taking. You're going to balance all 3 because you have to get 3 A's, not just 1 A. Okay, you can't just focus only on one subject to get 1 A. No, you have to focus all 3, give your best in all 3 so that you can get 3 A's. Clear? So now you're wondering what's cup? C. C stands for consistent. I always tell my students, no matter you start something great, if you can't be consistent, guys, you're not going to achieve anything in life. What does that mean? If you have started something, make sure you are doing that every day, little by little. I'm telling guys, if you have started A levels and you are studying each day, some students, they start A levels, study at first a lot, and then and then in the middle, they start giving up. That is not going to work. Guys, you should be consistent. Consistent means every day you should keep on working until you achieve. You can't just stop in the middle. You can't just give up. I'm not telling guys to work, get tired and don't sleep. No, I'm not telling like that. I'm telling every day when you maybe spend 2-3 hours studying, maybe spend 2-3 hours studying every day, you're being consistent. When you become consistent, guys, you will automatically feel at the end you have achieved a lot. You will not understand what I'm telling. Why? Because you will think, okay, that's not enough. But guys, every day, just do little. When you keep on doing little every day, at last it will become big. While your friends who thought they will study at the last moment, they will suffer because they didn't start from the beginning. If you start something, start from the beginning. Make sure until you finish it, you are being consistent. That means every day, if you are studying 3 hours, you should make sure you are studying till the end. Every day studying 3 hours, not stopping in the middle. Okay. Then the second one, what is that? You understanding. Okay. You should make sure you are studying, not just memorizing. Okay. If you ask my past students, I always tell them one thing: don't memorize. Okay, if it is, guys, if I say you memorize, isn't it unfair for the students who, now God doesn't give everyone the same memory power, right, to memorize everything? So isn't it unfair for the students where the God haven't given same memory power? So that's why I tell my students, don't memorize, understand something. Okay, now I am telling, okay, this is an asset. So then you should understand, why is it an asset? You don't just memorize it. You don't say, okay, my teacher told me this is an asset, so I also think this is an asset. No, you should be able to explain when someone comes and asks you. You should be able to explain that person, this is why this is called an asset. Do you understand? So that's why I'm telling y'all, guys, don't memorize anything. Memorizing something will be short term. But if you start understanding and studying, it's going to last forever. Because you will never forget, because you know what is the reason behind this. You know why is it like that. You know that because you didn't just kept on memorizing, you always understood what you're doing. Okay, so if I am teaching, guys, I will never tell my students to memorize. I'll make sure that you understand what you're going to study. Okay, so that's why you should always have a questioning mind. You will always have, okay, why is it like this? Why is it like that? And then you should ask your lecturer, okay, miss, why is it like that? Why can't it be like that? So then you're trying to understand. The more you understand, the deeper you go, guys, the better you get to know about the subject matter. Rather than just keep on memorizing like a parrot, you just keep on memorizing and then putting it out in the paper. That's not going to work, because, guys, in your paper, they are not going to test you the same thing. Every paper, every past paper, it will be tested differently. So you should be able to tackle at the exam pressure. You should be able to tackle the difference. So for that, you should understand, not just memorize. If you keep on memorizing, you can't change according to the question they give you. You will just keep on writing the theory, because you don't know how to adjust based on the question, because you can't understand what they are telling. Do you understand? And the next one is practice. Okay, the one of the most important thing, practice. Always make sure you practice. Okay, the more you practice, the better. The more you practice, the better. Why? Because, guys, even if you know everything 100%, even if let's say you have a very good memory power, okay, so you keep on memorizing stuff and you know everything 100%, but you don't do much questions, because you believe you know everything. So even if I don't attempt much questions, at the last moment in the exam, I can do it by myself. No, that's not going to work. Guys, A-levels is difficult. I'll tell you all in the first day itself, A-level is not easy. It's difficult, difficult, difficult. Okay, so you should understand A-level is difficult, and if you don't work hard, you are going to lose. You are going to lose if you don't work hard. Okay, don't think, guys, don't compare the smart people. Because even the smart people, if they don't work hard, they are not going to achieve. Because I know the people who got 9 A's in O-levels, they couldn't get 3 A's in A-levels because they were overconfident. They thought, like O-levels, if I study at the last moment, I can do everything. So, guys, that's what I'm telling. If you do not have memory power, I mean, if you are finding it very difficult to understand stuff, guys, don't just give up. Keep on working hard, because, guys, if you keep on working hard, you can beat talent. You can beat the talent of others. Why? Because you kept on working hard. You never gave up. For that, you should practice every day. Do questions. Guys, when you keep on doing questions, what happens? You keep on doing. For you, a question doesn't scare you anymore. For you all, when you see a paper, when they say, when the teacher says you, okay, you're going to have a mock exam, you're going to have an exam, it scares you, right? You're very scared. But, guys, you should be able to, where you get the final exam, it should just be like a normal exam for you. For that, what should you do? Practice every single day. When you keep on practicing every single day, the exam, the final exam paper which you're getting will be just like a normal paper you're doing. It will be just like a normal paper which you're going to do. So for that, guys, like what I do is, for my students to make sure that they practice, I keep mock exams. You can ask them. What I do is, guys, I keep mock exams every week. Once a week, I will keep mock exams, send the answers, tell them to mark. From the beginning, I don't start in the middle where they start revision. I start from the beginning so that I make sure that they are okay with doing exams. so that they don't get scared when they see exams, because they practice from the beginning. So guys, make sure you fill your cup. Okay, so if you fill your cup, you can easily get an A in accounting. Okay, or it all depends, guys. Just give your best, and the rest is in God's hand. Okay, just make sure you give your best and satisfy yourself. Okay, because each one of here, you have a dream, to achieve. Okay, so don't just give up your dreams for your family problems. All what problems comes, don't give up your dream. Okay, always take problems as an opportunity to achieve your dreams. Because guys, whenever you get a problem, then be thankful, guys. Believe me, if you get a problem, you should be thankful. You know why? Because guys, because of the problem only, you should start working harder. You should start trying your best so that you can solve this problem, so that you can become you educate yourself and become a better person, so that you can solve all the problems. You can help people. That's the best thing you can do. You earn a lot so that you can help people. Do you understand? So please make sure you fill your cup. How to fill your cup? Be consistent, understand, don't memorize. Practice. Every day, keep on practicing. Okay, so when you keep on practicing every day, guys, you don't feel studying as a burden. You don't feel studying is a burden because you kept on practicing every day. For you, it's like just a normal routine, like you're eating every day. That studying becomes just a normal routine. You don't feel it as a burden. While your friends who don't study and they study really when the exams are near, for them studying becomes a burden. They hate studying. But guys, for you, studying becomes a blessing because you are always studying and you know what's your purpose. You know that you have a purpose in life and you know that you have to achieve. You achieve what you started. You don't just start just because others started. You start so that you start something so that you finish it. So to finish it, be consistent. Be consistent. Okay, so I hope you all got the idea. I hope you all got some idea. I hope you all change your mind. If you had a negative mindset, I hope you all have changed it now. So I think we can start accounting now. Shall we start chapter 1? Are you all ready? Okay, so fine. Now let's start. Accounting and its importance. Okay, accounting and its importance. This is chapter 1. So grade 12, chapter 1, accounting and its importance. First of all, before studying accounting, you need to know what is accounting. What does accounting means? Okay, so before in ancient times, they felt like accounting is something useless. They felt like, why waste money keeping someone as accountant and telling him to just calculate, add and subtract? Why don't we just write it in a book, plus minus? When the money comes in, I put plus. When the money goes out, I put minus. You might have gone to grocery stores and see that grocery person, he will keep a small book and put plus and minus when they get money and when they pay money. So that's how they were. Okay, but then later they felt like, it's very difficult. It's very difficult because now when the business keeps on growing and growing, guys, what happens is it's very difficult. There are so many frauds happening. No one can control because you don't know how much money you have, how much profit you have. So that's why this accounting came. They felt like, okay, if we keep records, if we take this data and transfer it into information, it's going to be useful for anyone who is going to make a decision. So because of that only, you have accounting. So what is accounting? We say it is a process. Everything is a process, right? What does a process mean? Process means you have an input. What are you going to do? You're going to convert this input into output. This is what a process means. Okay, so you will take an input, you will have a process. From the process, you're going to convert it to output. So what you do is, every time when there is an input, in accounting accounting, what is an input? Transactions and events. Transactions, the day-to-day transaction, which is that is what you call as an input. For example, let's say, okay, now I am the business. Always one thing I have to tell y'all, when you're studying accounting, you should always think you're the business, not the owner, not the customer, not the government. You are the business. You are an accountant in a business. You're an accountant. Okay, so that means you are not an owner, you're an accountant. So what is happening, guys? Every day there are transactions happening. Customers coming and buying from you. You're selling to some customers. You're buying from suppliers. So every day, guys, there are transactions. You call these transactions where it is happening. So that's the input. Now these transactions which is happening, you have to convert it to output. Just think, guys, if you're a very big company, do you think there will be just 1 or 2 transactions happening every day? No, there are going to be billions, millions of transactions for a company every single day. So it's not easy just to keep on writing in a book. Okay, so what they need to do is, there will be like, let's say 1 million transactions per day. I'm talking about a big company, okay? 1 million transactions per day. What is a transaction? Transaction is where you exchange resources between the business and another party. For example, I go to the business. Okay, now I told I'm the business, right? Let's say a customer comes and buys. When the customer buys our goods, what are we sacrificing? We are giving our good and getting money. What are we doing? We are exchanging resources. We say transactions is where you exchange resource between the business and an external party. Okay, so now this transaction, there are 1 million transactions happening, let's say, in a company. Now, guys, when you just tell the shareholders, the users, the people who are interested in our business, if you just tell them, listen, we have 1 million transactions. Okay, we sold to customer this much, we bought from this supplier this much. Do you think the shareholders and the users, they can take it inside? No, it's very big. 1 million per day. It's not going to be easy. So what you do, you take these transactions and you summarize and summarize and summarize, so that you can give information to whom? To the interested parties, the parties who are interested in our business. You have to give them information. So what you do, you take the transactions and convert it to information, so that who can benefit from that? The interested parties. We call them as stakeholders. Stakeholders are the parties who are interested in our business. They have an interest. That means, guys, whenever we do something, that is going to affect their decision. For example, let's say we are trying to increase our price, the product price. Who will get affected, guys? Tell me, whose decision will change? We are trying to increase the price of the product. Let's say I'm selling stationery. I'm going to increase the price of the stationery. Tell me, guys, who is going to get affected? Very good. Customers. Now the customer who is going to make the decision, he will try to change his decision. He will try to change his decision, where he will try to go and buy from another business, because our business is going to sell at a higher price. Do you understand? So that's why you are going to give information. Now, what is the information you get? You told that the price is increasing. Now, what happened to the customers? They are going to affect, their decision is going to get affected. So that's why we say accounting is a process of providing information to whom? Stakeholders. Who are stakeholders? The parties who are interested in our business. So why are you giving them information? So that they can make decision. You're giving them information. Why? So that they can make economic decision. What does that mean? That means they can make the best decision. For their own benefit, they can make the best decision. So now the definition and the objective of accounting is the same. What is the definition? We say it's a process of providing information. To whom are you providing? To stakeholders. Why are you providing? To make economic decision. So objective and the definition are the same thing. Okay, now guys, I hope y'all are okay. I hope y'all are okay with the definition and the objective. Okay, now let's go to the next part. Who are stakeholders? Now I told you stakeholders are the parties who are interested in our business. They always want to know what is happening in our business. They are always interested. Guys, who are your stakeholders? Who are your stakeholders? Tell me, who are your stakeholders? Who is interested in you? Who is interested in you? Can you all tell me? Y'all can chat. Very good. Parents. Parents are your stakeholders. Teachers, friends. These are your stakeholders. They are interested in you. Same like that. When you start a business, principal, when you start a business, same like that. There are parties who will be interested in you. So now you have a doubt, why are they interested? Now you ask yourself a question, okay, we know there are parties who are interested, but now you need to know, why are they interested? Why do they have an interest in you? Okay, so that's why we have two types of stakeholders. We have two types. Mainly, we divide stakeholders into two: internal and external. Who are internal stakeholders? These are the stakeholders who are inside the business. They are inside the business. Okay, so they are interested in our business while they are inside the business. Who are external? These are stakeholders who are outside the business, but still they are interested. Okay, now we have a doubt, why do they need information? So in your exam, they can ask you, why does board of directors need information? So you need to know to answer that. Okay, now let's see one by one, why are these stakeholders interested in your business? Why do they have an interest? First stakeholder, internal. First stakeholder, you call them as management or board of directors. So guys, now let's say you start a company. When you start a company, there will be a group of people. You call them as the management, or you call them board of directors. Okay, these people are the ones who need information. Why do they need information? So that they can make decisions how to operate the business. Okay, so that means, guys, they need to know. Now you think a company. Okay, if there is a company, in a company, guys, there are some people called shareholders. Who are these shareholders? These shareholders are the parties who have invested in your company. Okay, no, management is not the owner. Y'all are asking me, is the management or the board of directors the owners? Okay, no, not always. There can be rare situations, but not always. Okay, I'll tell you, listen, I'll tell you like a story. Okay, now you say we have a company. Okay, now we started a company, guys. The company we started. Now, if you want to get capital, that means if you want to get money. Now, if you want to start a business, guys, you need money, right? So if you start a company, so for that you need money. So now let's say you have started a company. Okay, now guys, you need money. You can't just run a company. So you go and you tell the people, listen, come and invest, come and put money in our company. So there will be people who have a lot of money, and now you are asking them to come and invest in our business. Invest in our business means they have to come and put money. You call them as shareholders. When they come and put money in our business, you call them as shareholders. What do? They have a lot of money. Maybe your parents might be shareholders in certain companies. If they have money, what they can do? They can buy company shares. Okay, company has something called shares, guys. When they need to take money so that they create owners, they issue these shares. Who will buy these shares? These investors who have money. So when they buy these shares, they are called the shareholders. Now these people become the shareholders. They have ownership in the company. Okay, let's say this A shareholder bought 50% of the shares. Let's say B shareholder bought 30% of the shares. C shareholder bought 20% of the shares. Guys, shareholders, they are external. Okay, they are external to the organization. Now, there can be in a company, there can be many millions of shareholders. Okay, there can be a lot of shareholders, guys. So these shareholders, they can't come to the company every day and say, listen, I have put money in the company. No, now I can run the company. No, they can't do that. So what happens is these shareholders, these are the owners of the company. Okay, there can be a lot of owners. Now these shareholders, guys, they cannot come to the company and say, listen, do this, do that. Okay, they are external people. So what they do is they appoint someone. They will come to a meeting. We'll say, guys, there are a lot of shareholders. Okay, we'll say there are a lot of shareholders. All these shareholders, they gather to a meeting. Okay, we call it as annual general meeting. They will come to this meeting, guys. They will come to this meeting, and in this meeting only, they will select someone called. They will select someone called board of directors or managers. Now, let's say, guys, in this company, there are 10,000 shareholders. Let's say 10,000 shareholders. Guys, do you think these 10,000 shareholders can come to the company and rule the company, control the company? No. They will come to the meeting, and what will they do? They will select, let's say they will select 5 people. They will select 5 people as directors. What are these directors going to do? They are the one who is going to run the company. They will run the company. Who selected the directors? The shareholders. Shareholders will select the directors. Now, who will run the company? The directors are going to run the company. Okay, so if the directors are going to run the company, directors are what? Internal to the organization. Okay, based on what do they select directors? They select based on the skills, based on how they can make decisions. Okay, they will select. Okay, so one student is asking, Miss, the directors will be among shareholders? Yes, they can be among shareholders. Maybe out of this 10,000 shareholders, they will select most highly skilled, experienced 3 people. Or they can even select from external people. There is no rule. But guys, directors are the company. Directors are the people who will run the company. They will only run the company. So we call them as the management or the board of directors. Okay, yeah. Now, guys, when can the shareholder take decision? They can take decision only in the AGM. Annual general meeting. They will gather in the annual general meeting. They will only make decisions there. They will select directors. After they select directors, who should make the decision? Directors have to make, because they are the one who told the directors to run the company, right? So that's how it works. Okay, so the shareholders, they now just think, as if a company has 10,000 shareholders, and every day one shareholder comes and say, listen, I don't want this to happen, make it like that. The other one comes and say, no, I don't want this, make it like that. Just think as how will the company run? So they are external. We say they are external. Only once a year. The AGM happens once a year. So once a year, all the shareholders get together, they will make changes. Yes, every year they will be changing the directors. They will be changing. Okay, so that's why we say shareholders are external, internal are board of directors. Guys, this is in a perspective of a company. In a company. Now you all have a doubt. Okay, then in all of us, you might have studied owners are internal. Guys, if you are a one owner business, okay, if you are a one owner business, that means you are the owner, you are running the business. So then that case, owner is a internal person. Owner is internal. Here I was talking, guys, where shareholders are external, because it's a company. It's a company, guys. There can be a lot of shareholders, so shareholders can't come inside the business. Only in the annual general meeting, AGM means annual general meeting, they can come and make decisions, change the directors, they can do all those stuff. Okay, and they can tell, okay, do this, don't do this, they can do that. But guys, every day, who will run the company? The management or the board of directors. They are the one who is going to run the company. So now why do they need information? So that they can make decisions how to operate the business. Because they need, the most important people are they. They need information so that they can run the business. Because guys, who appointed who appointed the directors? Shareholders appointed them. So now tell me, guys, directors are responsible to whom? Directors are responsible to report to whom? Whom should they report? Whom should they report? Shareholders, because who appointed them? Who appointed them? Shareholders appointed them. Because shareholders appointed them, now they have a accountability. They have to report to them. So if they make a wrong decision, do you think shareholders will make them director next year? No, they will take them out. So now the directors, they are very scared to make decisions. If they just make one wrong decision, that's going to affect the company very badly. So they need information so that they make the right decision to operate the business. Okay, so for that, what will they do? They will plan. They will make a plan. They will organize. They will control the activities. They will make sure that they plan and organize and control so that they make the right decision. So that they make the right decision. Okay. And the next internal stakeholder is employee. Employees are inside the business. Now, why do employees need information? Now, guys, let's say you're an employee in a business. Now, why do you need information? Why do you need to see whether the business is earning profit or not? Because, guys, you're scared. What if the business shuts down? What if the business shut down? What happens? You are not going to get a salary anymore. You are not going to get a salary anymore. What if the business is starting to earn losses? They will delay your salary because they don't have money to pay you. Okay, so employees are very much interested in information to see whether they have to decide to stay or leave the company. They have to decide, guys, are they going to stay? Now, if they see, guys, 2-3 years they are incurring losses. They see the company 2-3 years they are having a loss. So now the employees get to know, okay, now they are having a loss. If I stay in the company, I will have no job. So what can the employee do? Based on the information they got, employee can soon start finding a new job so that they can change. So we call that employees need information for job security. for job security, to make sure that they have security in what job they are doing. Because guys, if they feel like the company is not going to pay them, or the company is going to reduce their salary, they have to find a solution and change the company. Okay. And the next one is external. So when it comes to a company, who are the two internal stakeholders? Management or the board of directors and employees when it comes to a company. Now, who are external? External are investors or shareholders. Investors or shareholders, these are the parties who have given money, who have invested in your company. Okay, they had a lot of money. They came and put in your company because they trusted your company. Okay, so now why do they need information? Because their money is inside. Now, guys, they put millions and billions of money in the company. What happens if the company starts bankrupt? Bankrupt means if the company fully shut down, their money is gone. They can't get back the money what they invested. So now the investors and shareholders, they are very much keen about the information. They always check, okay, is the company able to grow? How are they growing? Okay, they will check based on the past information. They will check, okay, is the company growing, or maybe is the company incurring losses every time. So guys, if they see the company is going in a bad way, can you tell me what they can do? What they can do? What they can do? I want your answers.
They'll take back their money.
Yeah, how do they take? Yeah, very good. You can sell the shares. Now see guys, here what did I tell you? They went and bought shares. Bought shares means they gave the money and took the shares. Bought share means guys, they have taken the money and they have given the money and taken shares. Now y'all are asking, what is shares? Shares is what represents the ownership. It's just like a certificate. Okay, this will represent the ownership of the company. Okay, how much, what is the ownership you have in the company is represented through shares. Okay, so if you want me to, I'll just show you all what is. Okay, it's just, guys, shares will be just like a certificate. Okay, wait, I'll show you. Okay, like this. This is what you call as a share. So in this share certificate, guys, they will say, okay, now John has bought this number of shares. In the shares, they will tell, okay, he have bought this number of shares. Okay, this is the money he invested. When did he put the money? It's just a certificate. So what did John do? John went and put the money and he got this certificate. Now, when he feels like the company is doing very bad, what can John do? John can sell back the shares. They can sell it. They can sell the shares. John can sell and get back the money. John, what he can do, he can sell it to another shareholder and get back the money. So that's why investors or the shareholders, why do they need information? To check whether the company is growing, to check the profitability of the company, whether the company is able to earn profits, whether the company is the company having the ability. What is profitability? Profitability is the ability of the company to earn profits. What's profitability? It is the ability of the company to earn profits. Guys, when the company earns profit only, they will pay you something called dividend. Now, what you do, you are a shareholder. Okay, you are a shareholder. You go and invest in the company. Now, what you do, you went and invested. Now, when the company is earning profit, how will they give you? They will give you something called dividend. Dividend is the money they will give you because you invested in shares. You have to get a return, right? Will you just go and invest? Now, from the profit, let's say you get let's say the business gets a profit. From that, they will pay the shareholders dividend. So the shareholders will love to have a lot of dividends. They will like to get more and more dividends. Okay, so that means, guys, if they feel like they are not going to get a lot of dividend, they will soon sell their shares. They will try to sell because they know that in the future it's going to decrease further. If they are fearing that, they will soon sell their shares. So that's why they need information. They need information. Clear? Okay, we'll just go through your questions. Once a shareholder sells the shares, he will not be the owner. Yeah, he will not no more owner. If he sells the shares, he's no more the owner. He has no control. And he get the same amount of money which he invested by selling shares? It depends. And he get the same amount? It depends. If the company is going very bad, no one will like to buy for the same amount. No one will like. So you might have to sell at a less price. It depends, guys, based on the market price. Okay. And then will the dividend be more than the shares invested? That's why, guys, shareholders take a risk. They take a risk. They don't know whether they will get a lot of dividend. If the company does very well, they will get a lot of dividend. Who are they trusting? They are trusting the directors. They are giving money and telling directors, run the company. If the directors make a wrong decision, it will affect the shareholders because the shareholders' money is inside. Understood? Okay. And we say dividend as income. Guys, for the shareholder, if you think about the shareholder, for the shareholder, dividend is the income they get because they invested money. You understand? But if you think of the company, it's not an income for the company. We don't call it as an expense. You will study in the future, but it's not an income for the company. For the shareholder, it's an income. Okay? Yes, Shafda. Miss, dividend means profit. No, dividend doesn't mean profit, dear. Profit. Now, let's say now the company, they get profit, right? From the profit, they will keep. Now, let's say the company got this year 10 million profit. This year, guys, the company got 10 million profit. They will not keep this. They will not give everything as dividend. They will keep something for the company. Maybe let's say 4 million they keep for the company because in the future for the company growth, for the company development, they will keep something, they will save. And the remaining only they will give as dividend. From the profit, they will keep something, retain, we retain. Okay, and then the remaining only they will give as dividend. They won't give everything, guys. If they give everything, how will the company survive? They need it for the future. Okay, so the remaining only they will give as dividend. Okay, if we buy more shares in a company, can we become the owners? It's like this. If you buy shares in a company, you get a part of the ownership. You get part of the ownership. Okay. No, miss, if the shareholders invest different amounts, will they get equal dividend? No, that's unfair. That's unfair. Let's say how they pay dividend is, they say, okay, for one share, we are giving 1 rupees dividend. 1 rupees dividend. So who has more shares gets more dividend. Who has more shares gets more dividend. Yes, that's correct. Dividend is the return the shareholders get investing in the company. Okay. Miss, are shareholders and stakeholders same? No. Shareholders are the people who invest in the business. Okay. If you take, guys, stakeholders, this is a doubt some of y'all have. Stakeholders. Who are stakeholders? These are the parties who are interested in your business. You call them stakeholders. Okay, stakeholders, there are many stakeholders. Shareholder is also a stakeholder. Shareholder, customer, government, all these supplier, these are stakeholders. I hope now you're clear. Okay, dividend means the money, the return you get because you invested in shares. Okay, next one, guys, potential of future investors to decide whether to invest or not in the business. Now, guys, there are people who haven't invested yet. Now, there are some people who haven't invested yet. They are checking. They haven't invested yet. We call them potential. In the future, they might invest. What do you call them? Potential investors. These potential investors, guys, now why do they need information? They need information to decide whether to invest or not. Now they have money. They have money, but they are thinking, they want to make a decision. Shall we put the money in the business or not? So that's why they need information. So they will check the profit of the business. They will check how much cash the business have, and then they will make a decision whether to invest or not. So why does potential investors need? Potential means the investors who are planning to invest. They haven't invested yet. That's why you call them as potential. Okay. Why do they need information? To decide whether to invest or not. Okay. For a company, shareholder is the owner. For a one owner business, you call them owner, right? For one owner business, for a grocery shop or something very small, you call them owner. But for a company, you call them shareholder. Okay. Means employees, are they paid from the profit? No, usually employees, you pay them salary. You pay them salary. Okay. It's like this, dear. Owner becomes internal if you're a sole trader business, one owner business. For a company, shareholders are external. Okay. Yes, Riza. What is potential? Potential means the people who are going to invest in the future. We call them potential. Okay. Owner, so this one owner business, the owner is internal. Shareholders are external. Shareholders are the owners of the company. They are external. Okay. No, guys, they will make decisions in annual general meeting. They will make decisions in the meeting, guys. They will only make the most important decisions. And then if the directors want to make, they will appoint very good knowledgeable people. Those are the directors. Directors are the one who will make the day-to-day decision. Okay. Okay, now let's continue. Government. Why does government need information? They are always checking, guys, whether you're earning profit. Whenever you earn profit, government will say, come on, give me tax. They always want to charge tax. So, guys, they are interested in your business to check whether you're getting profit. Whenever you get a profit, they will charge tax. That's why they need information. Okay, next one, guys, the financial institutions, or you call, who are financial institutions? Bank, insurance companies, the people who are giving us money. Okay, they are giving us money. These people are called the financial institutions, or maybe they are giving us finance services. Okay, you might have heard insurance companies, leasing companies. Okay, all these companies, they give you what service? Finance services. You call them financial institutions. Guys, the doubts which you all have, if I haven't answered, maybe after class, guys, I will stay and answer for your doubts. Okay. So guys, now see, to assess the ability of the business to repay the loan and interest. Now, guys, when someone gives you loan, you go to the bank and ask for a loan. Will they just give you loan? No, right? They will always ask you something called interest. Now, for example, you need money. You need money to start a business. You go to the bank and ask for a loan. They are not just going to give you a loan. They will tell, listen, I will give you 1 million loan. I will give you 1 million loan. But don't forget, you have to pay me with 10% interest. They will ask you to pay with interest because that's the return they get for giving you loan. If not, will anyone like to just give you loan? Because they are taking a very big risk, right? What if you don't repay them? That's going to be a risk for them. So they say, listen, we are taking a risk and giving you a loan, pay us 10% interest. So every time, now why do financial institutions need information? Why do banks and all need information about us? They need, when you ask a loan, they will tell, listen, show me your information, show me your financial statement. They will check that to see whether you are doing business well, to see whether you have proper cash flow, to see how much cash you have, whether you have the ability to pay the loan which they give you. Now they gave you 1 million loan. They want to know whether the business has the ability to repay the loan with the interest. Okay. Then the next one, trade receivable, or we say customers. These customers are the people who you sell them the goods. Okay, so now trade receivables are, guys, when you sell goods on credit, that means you tell, listen, now the customers tell, I will buy your goods but pay you later. You are selling them to customers, and then customers say they will pay later. You call them as trade receivables. Oh, guys, the other one is customers are, if the customer doesn't pay you money on time, I mean, he says that he will pay later, you call them trade receivable. Now, why do customers need information? They want to check whether the business has the ability or the company to supply goods and services on a continuous basis. Now, guys, these customers, they become loyal to the company, right? They become loyal to the company. So they need to know, okay, whether the business has the ability to continuously give them the goods. Now we are selling them, right? So they are interested to know whether the business has the ability to continuously supply goods and services. For example, if you take students, okay, now I am the business, I am teaching, I am the business. You all are interested in me to see whether I am going to continuously teach till your A levels. Because, guys, if I stop in the middle, it's going to affect each one of you. So you have an interest in me whether I am going to provide the service on a continuous basis. Yes, you can even take that, Shafna. Now let's go to next one, trade payable or suppliers. This is where you go and buy goods. You go and buy goods from a creditor. You buy raw materials. Now, if you want to sell, guys, you have to buy from someone, no? You have to buy and only sell it. Or maybe you have to buy raw materials so that you can produce and sell it. So, guys, now why do they need information? They need information to check whether now they are giving you goods. No, they want to check if the business has the ability to pay for the goods and services supply. They want to know whether the business has the ability to pay. Now they are giving you goods. Now we have to pay them. Now they are very interested to know whether we are having the ability to pay. Okay, so trade payable means creditor. Creditor is what you call as trade payable. Who are they? These people are the ones you have bought goods on credit. That means you are telling, listen, I will pay you later, and you have purchased goods, saying that you will pay later. So now they are very much interested to know whether you will pay or not. Whether you will pay or not. Okay. Now the last one, external auditors. External auditors. Now, guys, think you're a company. Okay. In a company, guys, what happens? Now this company shareholders, can they trust the directors? What do you all think? Shareholders, they don't come every day. They don't come every day to the company, guys. Yes, Zainab. They don't come every day to the company. Can they trust the directors? Can they trust? Quickly, everyone, answer. Guys, even your close friend, even your sibling can betray you. Okay, now these shareholders, they don't come to the company. How can they trust the directors? Even though they have given them the responsibility, the directors, they can do fraud. The directors can betray the shareholders. What they can do is, the directors can slowly take money for themselves. They can pay a lot of money for themselves. They can do so much frauds. Now the shareholders, now the law says, listen, even though you have appointed directors, now shareholder has given money. They have put a lot of money in the company. So now for the shareholder, you should make sure the shareholders, now shareholders can't come, right? Now you all were wondering, if the shareholders can't come, it's unfair. They gave a lot of money. Now, why can't the shareholders come, guys? There are a lot of shareholders. If they all come, it's going to collapse. I mean, no control. So what happens is you have someone called auditor. Now these shareholders, these 10,000 shareholders, appoint one person called auditor. Who is this auditor? This auditor is an independent person. He will be an independent, it's a firm, okay? It's a company. It's an independent company. These auditors, what will they do? They will come to the company. They will come to the company, guys, and they will check all what the directors did. They will check all what the directors did to see whether it is true and fair. Because, guys, directors in best, if you just go and check, guys, there are so many companies where the directors have done so many frauds. So that's why we have to appoint someone called auditor. Who are auditors? These are the people who will come and give you, who will come and give check our information, and they will say the shareholders, listen shareholders, the directors have done everything correctly. The directors have given true and fair information. Okay, now you all are asking, how can we trust auditors? Guys, to become an auditor, there are so many rules you have to follow. Okay, you have to be independent. That means this person who is an auditor, he shouldn't know any directors. Any directors who are there, he shouldn't know them. Okay, he shouldn't know them. He should be independent. He shouldn't there shouldn't be any relatives or anything. There are so many rules, guys. You will study in higher studies, but remember, auditors are appointed by shareholders to check the financial statements of a company, whether the directors have done it properly, to give an opinion. They will give an opinion. They will tell the shareholders, listen shareholders, the informations are true and fair. The informations are true and fair. Are they paid by shareholders personally? No, Mushtaq. Directors, when you pay directors, auditors, the salary, the amount you pay, it's an expense for the business. Okay, what if they are relatives? They can't become an auditor. What if now let's say this auditor has a relative which is the director? They cannot become an auditor. If they become an auditor, guys, their license will be taken. There are so many legal things, guys. Yeah, as you all told, there are auditing firms. You can just go and check in the Google, guys. There are past auditing firms who have also done frauds, and they have completely become bankrupt. Okay, they have gone to jail and all those stuff. You can check. Yeah, anyone can do frauds, but auditors, there are so many rules they have to follow. Okay, if the directors haven't done properly, what will the auditors do? Okay, yes, auditors will tell the shareholders, listen shareholders, these are the directors who have done mistakes. This is what they have done. This is the frauds they have done. What will the shareholders do? Shareholders they can take action against directors, and they can take directors out of the company so that they appoint new directors. Okay, and they can take legal actions, guys, where they can go to court and take. There are so many rules. Understood? Auditor is not among shareholder. No. Auditor cannot be a shareholder. Auditor is always an external, independent person. He is always independent. He is not dependent on anyone. He is not dependent. He is always independent. So what does auditors do? They provide opinion on financial statements. Provide opinion means they will say whether the information are true and fair. They will say, guys, whether the financial statements are true and fair. Okay, so this is what the auditors do. Guys, I think I explained more than which is required, because you will study this in detail in business studies. But guys, I can't just tell you what without going in depth, because you will not understand. This is the first time you all might be hearing these words. That's why I went in depth. Okay, now let's go to next one. We are going to study the types of accounting. Accounting, guys, you divide it mainly into two: financial and management accounting. Financial accounting and management accounting. Okay, you have accounting, guys, you divide into two: financial and management. These guys, these internal people, you have management accounting. For the external people, you prepare something called financial accounting. Okay, now let's read what is financial accounting. It is the process of providing financial information to external stakeholders to make decision. Now see, guys, the definition is the same, but now it is something modified. We say is the process of providing financial information. If it is financial accounting, we say we provide financial information. What does financial means? You provide about the monetary terms, the money information. What does that mean? How much is the sales? How much is the profit? How much is the assets? All the monetary information. To whom are you providing? Before when you said accounting, you said stakeholder. But for financial accounting, we say to whom? External stakeholder, outsiders. We say external. Why? To make decisions. To make decisions. Easy, right? Nothing difficult. Financial accounting is where you provide which information? Only financial information. Financial means, guys, which you can measure by money. Financial, okay? To whom are you providing? To external people. Why? So that they can make decision. They can make decision, okay? So we say, guys, financial accounting informations, these are it prepares general purpose financial statements for the use of stakeholders. When you are doing financial accounting, guys, you don't favor anyone. That means, guys, when you're an accountant, okay, you should think you're an accountant. Now, when you're preparing accounts, guys, you can't favor anyone. You can't prepare accounts, okay, only for customer. Okay, you can't only think about customer. When you are preparing financial accounting, you will make sure you prepare general purpose. General means common. You will check, okay, we studied now, there are so many external stakeholders. We have given few here. You will think, okay, out all of these external stakeholders, what are their common needs? What is the common information they all need? Okay, based on the common information they need, you will prepare accounts. You will prepare accounts. That's what general purpose financial statements means. General purpose means you are not checking one by one external stakeholder. You are checking as common. What is the common need of all the stakeholders? And then you will prepare financial statements. But guys, if it is management accounting, it is the process of providing financial and non-financial to whom? To internal stakeholders. We say management to make decision. Now, guys, when it comes to management accounting, you're not only providing financial, you're providing non-financial too. Now, I'll give examples, okay? Now, financial, let's say, we say machine value. Machine is an asset. You will study what's an asset later, okay? Let's say machine is 1 million. Now, when it comes to financial accounting, you will only say this. You will only say machine is 1 million. But if it is management accounting, you will say total machine is 1 million. Not only that, you will also say, okay, there are how many machines in the business? These machines, how many goods they can produce? You are not only giving financial information, you're giving non-financial. You're giving how many machines are there. Now, how many machines are there? You're not measuring in money, right? You're just counting. Okay, we say, okay, if it is management accounting, you will say, listen, managers, we have 10 machines. Each machine, it is capable of producing 1,000 goods per day. You will give non-financial information because, guys, management accounting is like your house. Inside your house, you know a lot of information, right? You know a lot of secrets. Do you go and tell everything to your friends? Do you go and tell everything to everyone? No, right? There are certain stuffs you have never told anyone except for inside your family. Okay, so like that told, management accounting is something like the house, inside the house. So it can be any information. Okay, but if it is financial accounting, guys, you will only give what is important to external people. You won't tell everything to everyone, right? Whatever which is very confidential, you will keep it inside yourself. When it comes to something common, you will tell it to others, not a problem. That's how financial accounting is. Understood? Financial accounting is where you provide financial information. To whom are you providing? To external people. Why are you providing? So that they can make decisions. What information do they prepare? They prepare general purpose financial statement. General purpose means they don't check one by one. They give as the common. They will check, okay, what are the common needs of everyone, and then they will give information. We say they prepare general purpose. But if it is management accounting, guys, we say it is specific purpose. For example, manager comes and tell you, now you're the accountant, okay? Manager comes and tells you, okay, now make me an information about this machine. You have bought a machine A. Now your manager comes and tell, okay, prepare information about this machine A. So, guys, you are only doing for whom? For the manager. You are only satisfying. You're only giving information for a specific purpose. For the machine A only. So, management accounting is usually you prepare specific purpose financial statements. Specific, only for a specific purpose. That means now you will say, okay, machine A, you can produce this much of goods. This is the income you can earn. This is the capacity. Okay, this is the price. This is like that. You will give very detailed information about machine A. But guys, if it is general purpose, you're not going to give detailed information. You will give summarized as possible, where you cater all the common needs of all the external stakeholders. Okay, now we are going to study difference between financial and management. Okay, yeah, can you give some examples of non-financial? That's what I told you. Non-financial, number of employees. That is non-financial. Okay, if you all want, I can give some example. Okay, let's say like this. If it is financial, non-financial. Now let's take financial. For example, we can say, okay, machine price. Machine is 1 million rupees. That is financial. You are giving in monetary terms, money terms. But if it is non-financial, you will say, okay, this 1 million machine, the total is 1 million. No, there are 5 machines. This is non-financial. You say 5 machines. Now, another example, you can say, okay, you are paying salary to the employees. How much salary you are paying? 100,000. This is financial. You're measuring through money. If it is not financial, you will say, okay, there are 100 employees in our business. Now, can you understand? You say there are 100 employees. You can say, okay, each employee, this is the skills they have. This is the experience they have, non-financial. Now for these machines, you can say, okay, this is the capacity they have. This is non-financial. External people don't need to know this. Internal people only need to know this so that they can make operating day-to-day decisions. External people just want to know this. Are you clear? Are you clear? They don't care how many machines you have. They want to know how much is the worth of the machine. Are you clear now? Okay. Now see, guys, Now see, but when it comes to internal people, they need detailed information. They need to know everything so that managers, they can make operating decision. Every day, day-to-day decisions they have to make. You know why? Because they are responsible to give to the shareholders. They have to tell the shareholders, listen, shareholders, we made the right decision. We made the right decision. They have to prove them. For that, they are responsible. What is specific purpose? Specific purpose means you give based on the manager's requirement. Okay. Now the manager comes and asks you, listen, prepare an information, give it to the bank. Now you as an accountant, you will specially prepare based on the purpose only for the bank. Okay. Now let's say you want to take a loan. Manager comes and tells you, okay, prepare an information so that you can give it to the bank. Prepare an information so that you can give it to the tax authority for the tax. Okay, so these are specific purpose. In order to satisfy one special purpose, you're preparing only for that purpose. But general purpose, you don't think one by one. You just prepare for the common needs of everyone. Everyone wants to know what's the profit. So you will prepare statement of profit dollars to give the profit. Okay, like that. You will cater common needs of everyone. Now let's study what is the difference between financial and management. What is the difference? Guys, very important. If you take your past paper, they usually test this. Okay, they usually test this where, guys, they will ask you to write the difference between financial. I just gave you the past papers. See, guys, in the past papers, they have asked you, okay, they will give you the base and tell, right, what is the difference between financial and management. So you need to know that. Okay. Now let's see. We say, guys, financial accounting, who uses the information? Financial accounting, guys, information can be used by both internal and external. Now you will ask me, but I told here financial accounting is the process of providing financial information external stakeholders. Yes, that's right. What is the purpose you prepare? You prepare it to give it to external. But can the internal people use? Yes, they can. They are the people who are internal, guys. They need to know everything. They can use financial accounting information. But what is the purpose? The purpose is to give it to external people. Okay. Users are who? Okay. If you want to know what is user is the stakeholder. Okay. Be careful. This is USER. Not USES. This is not the use. Okay? User means stakeholder. Another word for user, stakeholder. Another word for stakeholder, interested party. Okay, so now who are the users of information? Who are the stakeholders? If it is financial accounting, both internal and external. If it is management accounting, can the external people check management accounting information? Can they come and check, okay, how many machines they have? What is the cost of the, can they come and check? No, they can't. That is inside, guys. They can't check. Only the internal users are allowed to check the management accounting. Only the internal people. Okay, now let's go to the next one. Let's go to nature of information. Nature. What is the nature of information? We say, guys, financial accounting is historical information. What does that mean? That means, guys, what type of information are you going to give? Historical, if you don't know, write it there, past. If it is, guys, financial accounting, you always give past information. Whatever happened in the past. That means, guys, now you will say, now let's say if it is financial accounting, you will tell the shareholders, listen, shareholders, this is the profit we earned in 2020. This is the profit we earned. We are always talking about the past. Financial accounting always talks about what already happened. What happened in the past. That's the information you will give it to the users, the external people. But guys, if it is management accounting, you not only give about the past, but mainly you give about the future. Guys, who has to make the decision? Who has to make operating decision, day-to-day decision? Who have to make? Can you all tell me quickly? I want your replies. Very good. Managers, the board of directors, they have to make day-to-day decisions. Okay, so guys, tell me guys, if they want to make day-to-day decisions, if you just give them the past, if you just give them the past information, is it enough? No, you should give them future. You should give them future. You should tell. Okay, now as an accountant, you should show them, listen, manager, this is what is the profit you're going to earn. If we sell this much goods, this much profit we can earn. You always talk about the future. Yes, financial accounting, if you all have studied before, this is statement of profit or loss, statement of financial position. These are financial accounting. Okay, we will study here. Okay, if you go down, guys, we will be studying here. See, this is, if it is financial accounting, we say the output is financial position, profit or loss. Okay, so that we will be studying. Now, guys, listen, if it is management accounting, you not only talk about past, but about the future. Because, guys, if you don't make the decision properly, now you're going to be responsible to the shareholder. So as a manager, you always have to think about your future. You have to think how well can you run the business so that in future I can get good profits. So they always need future information. They always need, okay, then you will ask me, okay, how can you know the future? How can you know? As they can predict. These are not 100% true, but they can predict. They can say, okay, now if we sell in the future 10,000 goods, okay, we can earn this much profit. Like that, they can predict. It's not going to be 100. Yes, it's just assumptions, but that's very important for them so that they can make proper decision. Legal requirements. Guys, if it is financial accounting, you have to, yes, Safia. Budgeted, same like future. Budgeted, future, forecasted, all are same. Budgeted, future, forecasted, all are same. Okay, so that means about the future. Now, for example, guys, you might have heard in the government budget, they say government budget, in the future they are going to earn this much income. In the future, next year they are going to earn this much expense. They are going to incur this much profit and all. They will tell you, right, in the news. So this is what budgeted means. They talk about the future. They plan for the future. Okay, so as a manager, they should always plan the future, even though it might not be 100% correct, but they have to plan so that they make the right decision. Legal requirements. Legal requirements means, guys, do they need to follow the law? There are laws you have to, when you prepare accounts, guys, you have to follow certain legal requirements. If it is financial accounting, guys, it is a must. You have to follow these. Why? Because you are giving them to external people. Guys, for example, if you make food, guys, what you do is the best part of the food, you will give it to the visitors, right? The external people. And the remaining one only you all will eat, right? Most, I hope you all do that. Okay. So like that only. Now, when it comes to information, you should make sure you give information, the proper information to whom? To the external people. Okay. So that's why you have to follow all the laws. You have to follow the legal requirements so that you give the correct information. But if it is management accounting, guys, inside your house, do you follow rules and regulation? No, No, you have the freedom. Same like that. If it is management accounting, they don't have to follow legal requirements. When they prepare accounts, guys, they can prepare the way they want because that is going to be used by only them. They are the one who is going to use them. But if it is financial accounting, they are going to give it to external people. That means they have to follow the rules and regulation. They have to follow. Okay. So that's why we say it's applicable. Here, it's not applicable. Frequency of reporting. Frequency of reporting means when are you giving this information? When are you giving them? If it is financial accounting, guys, you have to give this information annually. You have to give information every year, once a year. Okay, in 1 year, at one time, you have to give financial accounting information to the users. But if it is management accounting, you can't wait till 1 year. Whenever the manager comes and asks information, you have to give. For example, now I am an employee. Manager comes and tells, prepare me a report. I have to prepare now. I can't tell, okay, no, I will only prepare once a year. So we say, guys, if it is management accounting, it is on demand by the management. That means whenever the manager is demanding, you have to give the information. Okay, so that's why we say on demand by the management. Types of information. If it is financial accounting, we say, guys, financial information. We learned here. Financial accounting is always financial information. But management accounting, it can be both financial and non-financial. It can be both financial as well as non-financial. I don't need to explain this because I already told you. Okay. Level of detail. How detailed you should give information. If it is financial accounting, guys, you always give summarized. You will always try to summarize much as possible and give the last final information. If it is management accounting, you will give in detail. Okay, whatever happens to you, you don't tell everything to everyone, right? You just give the summary. But if it is inside, you will always tell the detail because you need detail. Why? Because the managers have to make decision. If you give them the summarized information, they will not make the right decision because they need to know the depth of it. So that's why if it is management accounting, you make sure you give in detail. Information should be very much detailed. Okay? Every part should be shown. If it is, guys, financial accounting, you need audit. You know what's audit now? Auditors are the ones who do audit. Okay, so guys, if it is financial accounting, you are giving to external people. That means it should be audited. Okay, when it comes to, guys, management accounting, you don't need to audit it because who uses that? We users, we prepare it for us itself. We prepare this information for us itself. So why do you need to audit it? You are not going to give it to anyone. But if it is financial accounting, you're giving it to the users. So it's going to affect the decision of the users. Users' decision will be affected. Guys. So that means you have to make sure you audit. What is audit? Just now I explained. This is what audit is. Guys, audit is where you appoint someone called auditor. This auditor will come and audit your information. Audit means they will check one by one and give true and fair information. So if it is financial accounting information, those are the one you have to audit. Auditors are the people who will audit. Audit means checking your financial statement to see whether they give true and fair information. If it is management accounting, do you need to audit? No, guys, management accounting, you don't need to audit because that is used by them. Auditors are there in the audit firm. Audit firm is a company which gives audit. They only provide auditing service. Clear? So if it is financial accounting information, you have to audit because you give it to external people. Management accounting information, you don't need to audit because you keep it for yourself. Why do you need to audit your information? You are not going to give it to someone else so that now if you give it to someone else only, guys, their decision is going to change, right? Their decision is going to get affected. If you're not giving to someone else, then you don't have a problem. You don't have to audit. Structure, guys, structure, we say, guys, financial accounting structure, you make sure you give information for the overall organization. That means, let's say, for example, in a company, guys, you have different division. You have selling division, production division, marketing. There are different division, accounting division, marketing, and then what else? There are so many divisions, guys. Now, when it comes to financial accounting, you will give information as overall organization. You don't give one by one. You will just take one company as one and give information, everything just one. But if it is, guys, management accounting, you know that you give detailed information. That means for every specific division, you will separately prepare accounts. For every division, you will separately prepare accounts. But if it is financial accounting, you just make one thing as an overall and give it. As an overall, you will just make one thing and give it. Yeah? So, guys, these are the difference between financial and management. Very important. I showed you all the proof. Why is it important? It's tested. Okay. So, guys, when I'm teaching, what I do is I always do like this. Okay. As soon as I finish a chapter, if there are past paper questions, I make sure that I let the students do that. Okay. And then we do the discussion. Why? Because, guys, your main focus is your final exam. So your past papers are the most important thing. You need to do almost maybe 20, 10, 15 past papers before you go to your final exam. So you should make sure if you have the ability to do the past paper, no matter how much we teach the theory, if you cannot try the past paper, then that's a problem, right? So that's what I do is every time I finish a chapter, I do the past papers. I give the questions so that the students attempt it. Okay. Miss, do you keep exams after each chapter? Actually, I keep exam every week. Every week, I'll just keep a small mock exam where the students have to do that and they have to send me the answers privately. After that, I will do a discussion. If it's a bit easy paper, I'll just send the answers with the marks. They can mark it by themselves. If it's a bit difficult, I will be doing a discussion. Okay? Yeah, every year it comes. Every year, the first question of the past paper is from the first chapter. Okay. Okay. Yes. Safna, you prepare based on the specific needs of the managers. Okay. Yeah, we are having fun with exams. Shareholders from whom they will buy the shares, they can buy from the another shareholder or they can buy from the company itself. Okay. Yeah, you have to do the question. Yeah, that's how I actually do. Okay. Now let's go to the next one. Accounting process. Okay, we'll try to finish this and then we'll end the class, guys. We'll try to just go through this, okay? The management accounting process. The management accounting process, guys. Wait, so miss, when the company is giving, he will be the owner. Yeah, he gets the ownership. Okay, he gets the ownership. Now let's go to management accounting. If you take, guys, you know that there are two accounting, financial and management. Management accounting is where you take the input, you know, everything is a process. You will take input and convert it to output. For management accounting, the process is different. For financial accounting, the process is different. Okay. So if it is management accounting, you know, it's internal. Now, what is the input of management accounting? Input of management accounting, we say past and future information. Historic means past. Budget means future. Okay, the managers, they take past and future information. They will take that, they will plan, they will budget and control. What is that? What does that mean? Based on the information, guys, they will make a plan. What are they going to do? They are going to make a plan, guys. After they make a plan, what will they do? They will budget it. Budget means, guys, they will prepare statements for the future. Okay, they will see, okay, now this is the information we have. Now, if you, because of this information, we can come to a conclusion, okay, this is the profit the business is going to earn. This is the cash the business is going to earn for the future. Budget means, guys, talking about the next year, the future. And then, guys, let's say they found out, based on the information, they found out they are going to have a loss. What will the business do? The managers will start controlling. Controlling means they will try their way to make sure that they are reducing the loss or trying to earn profit. Okay, so based on the past and future information, they will plan, they will budget, and they will control it. And then, guys, after they do that, they will get the output. By budgeting, guys, they will get the budget statements. That means the future financial statements. Future. Guys, financial accounting is past. Management accounting, now budget statements is about the future. Accounting ratios, overhead analysis, marginal costing, investment. Even if I explain you all now, you will not understand. Guys, these are grade 13 chapters. In grade 13, these are each one chapters you will study. Okay, you will study overhead analysis, guys. You will study marginal costing, chapter 15. Grade 13, chapter 16, investment appraisal. Chapter 14, overhead analysis. Okay, ratio, chapter 13. All these are management accounting outputs. Just know these terms, guys. You don't need to know the meaning. Later, you will study the meaning one by one. Okay, so you take this, what is budget statements? That means the future financial statements. Okay, future okay, you all are asking how many chapters you all have. Okay, I'll tell that. Now, if you take grade 12, in grade 12, guys, you have how many chapters? 10. Okay, if you take grade 12, guys, you have 10 chapters. 10. Grade 13, you have from 11, chapter 11, chapter 16. Okay, so that means in total, your A-level syllabus, in total, guys, your A-level syllabus has 16 chapters. Okay, 16. So, guys, after that, when you go to financial accounting, the input is transactions and events. The transactions and events, the day-to-day, the exchange of resources which happen between the business and the external party. You take these transactions and what you do, guys, you recognize, you measure, you find the value. You find the value and you find whether you are going to record as an asset, liability, or income or expense. You will study in detail what is that. Okay, record, then you take them and record. After you record, guys, you will classify them. Okay, why are you doing all this process? So that you get a summary. You try to reduce the information as much as possible, because you know financial accounting provides summarized information. So, guys, you should make sure you summarize as much as possible so that the external users can easily make decisions. So that's why you record, then you classify, you will then summarize it, then you will analyze. Okay, so these terms, guys, we have given the meaning. What is collecting and recording? This is where you will identify various transactions and events, and then you will record it in books of accounts. What do you call that? Prime entry book. Okay, after you do transactions, guys, the first place you record is what you call as prime entry book. Prime entry book is the first place, guys, you are going to record all the transactions and events which happen in the business. Okay, that's the first place. You call it as what? The prime entry book. Okay, and then after you record, guys, you will classify them into assets, liability, expense, income, and okay, it should be equity. Expense, no, it should be equity, guys. Equity, income, and expenses. And then you will record in different ledger accounts. Now, if you haven't done O-level commerce, you might not understand this properly. Why? Because, guys, you have to do this for you to understand. You have to know what is asset, what is liability, which you will study in the future. You need to know what is ledger accounts. In summarizing, guys, you will balance the ledger accounts and prepare trial balance and financial statements. These terms, whichever we are using here, we will be doing in the future. Prime entry book, chapter 4. Okay, ledger accounts, chapter 3. Trial balance, chapter 4. Financial statements, chapter 6. Okay, and then, guys, after that, you will analyze and interpret. You will go in depth. You will find out, okay, what is this, what is that. You will compare and analyze them so that you can make decisions, and then you will present it to the stakeholders, to the users. You will give this information to the users so that they can make decisions. So, guys, after you have the process, what happens? There will be financial statements as the output. Financial statements are the output of the accounting process, financial accounting process. What are the 5 output? Statement of comprehensive income. What does that mean? You might have studied it. Statement of profit or loss. This is a statement you prepare to find how much is the profit. Statement of financial position. This is a statement you prepare to find the position of the business in terms of assets, liability, equity. Statement of changes in equity. Statement of cash flows. Cash flows is prepared to find the cash of the business. Notes will give you in detailed information. Guys, I can't explain you a lot when it comes to these, because, guys, these are you will study in depth in the future, but you need to know these terms now itself. You need to know. And then, guys, we will study in the next class. If you join my class, guys, we can study the next part where we will be studying, guys, what is the purpose, what is the objective of this financial statement. Okay, so you need to know this process. Management accounting, they will take historical and budgeted, they will process it and then have the output. Okay, if it is financial accounting, you take the transactions and event, you will record, measure, recognize, classify, summarize, then you will give the output. Output what? Statement of comprehensive financial position, changes in equity, and cash flows. Okay, now what y'all are asking, what are assets and liabilities? Guys, assets, liabilities, we will be studying in chapter 2. That's chapter 2, guys. Okay, that's chapter 2. You will study in depth. Okay, Miss, can you explain the output? Now, guys, output of the management accounting. If you take the output of management accounting, now you have information. Based on that information, you will budget the future. You will budget it. That means you will show the managers, listen, managers, these are our budget statements. These are our future profit. These are our future cash. Okay, that is output. But if it is financial accounting, you give the past information. What was our profit last year? What was our assets last year? What was our cash last year? It gives about the past. Do you understand now? Okay, yes, assets, liabilities, guys, that is chapter 2. You will study in depth with examples. Okay, so assets, liability, equity, income, expense, these are the elements of accounting. We call them the elements of accounting. Clear? elements. What do you call this? You call these as components. If they ask you what are the components of accounting, then we say statement of comprehensive income, financial position, changes in equity, cash flows, and notes. In the future, you will prepare them. You will do accounts. Okay, in grade 13, guys, you will do accounts when it comes to this. This also, guys, you will be doing accounts. Okay. Analyzing means, guys, you will see, okay, what is, okay, you will see what is the profit, or you will analyze and see from the last year, has the profit increased, has the profit reduced, like that you will analyze. You understand? That's how you do. Okay, guys. So now what you can do is this one, we will do it in next class, because I feel it's enough for the first day. Okay, guys, if you all want to know information about my class, you guys, in our institute, if you join 3 subjects, all 3 subjects, you will get 500 rupees free. I mean discount, sorry, 500 rupees discount. You just have to put this coupon, you will get the discount. Okay, so then if you want to know how to register, guys, you can go to our YouTube channel. In our YouTube channel, guys, we have made a video how to access, guys, how to access the website. Okay, so then if you ask me what is my monthly charge, okay, so my monthly charge is, guys, 2,000 per month. I will be doing 2.5 hours per week, 2,000 per month. Okay, you can go and register if you want to. Okay, the today's session, guys, okay, today's session you will okay, you want my number? Wait, I'll give you all. Today's session's recording, you can take it in the YouTube channel which I showed you. Okay, in our YouTube channel, guys, we will be uploading it. You can go and check it. We will be uploading it. Okay, if you want future free sessions, make sure you subscribe so that you can get notification. Okay, so if you want to know my number, okay, write it down, guys. This is my number. Okay, you can ask further inquiries in this 077 875 9158. Okay, 077 875 9158. Okay, I think this is enough for today, guys. Tomorrow we will be having economics free session. Okay, tomorrow we will be having economics first day free session, where you all can come and join and decide, guys, whether economics is better or what. Okay, what about that, guys? This tute, the soft copy is there in the in our YouTube channel. You can go and download it, guys. It will be there. So the name of the YouTube channel is Sateha College. Okay, you can go and check there. Okay, is there any other doubts? If not, we can end the class for today. No, I am only teaching accounting. Okay, yeah, I will be doing, I am already doing, guys, I'm already doing advanced level private classes. If you want to join, you can just put me a message, guys. I'll help you out. How to get the economics link, guys? Message to this number. I will send you the economics link. Okay, where is the number I showed? Okay, you can message to this. Okay, yeah, anything else? And the business studies also you will have, guys. Business studies also you will have. Yeah, so guys, if you have anything else, you can ask me. The first session is free, guys. You can join and check whether the lecturing is good or not. Okay, so that's it for today. So my class time is, guys, every Tuesday 2:30 to 3 to 5:30. 3 to 5:30. Will you yeah, I will be keeping physical as well as online. If the physical starts, guys, I will start physical classes also. Okay, what else? No, it is for the students who join my class only, guys. Okay, so I think we can stop it here. Thank you for joining. I hope you all understood. I hope you all got the benefit. Okay, so if you have further inquiries, make sure you privately message. Will you continue the online? Yes, I will be continuing online as well as If the physical starts, I will be continuing with physical. Both, guys, both. Okay? So take care, study well. If you have any doubts, you can message. Okay? I hope. Take care, guys. Bye-bye.